Jay Fong from GSR and Tobias Long from Blockhead Founders Fund. Sadly, we made it because Tobias delayed. We also have Kenneth Rock moderating this panel. Kenneth is an angel investor, consultant in the crypto space. He's also currently writing a book on DeFi published by Wiley early next year. So, Kenneth, take it away.
Okay, very good afternoon to everyone. Thank you, Blockhead, for having us. So this panel is going to be about venture capital. The thing that I'm kind of wanting to look into is this era that we're in, the market that we're in. I'm going to ask panelists about some of their own thoughts around the different market and looking for. But maybe just to start, maybe having a round of introductions from the CJ colleague.
Hello. Hello everyone. I'm Evans, currently the head of investment at Kobe Ventures. Nice meeting you all here today. So a little bit about myself. I got a background of finance and data science, and my past working experience is application research and helping private preferred in China. Risk management, consulting, and risk management in space. So I joined Kobe last year as the analyst, and now I'm currently the DeFi and the GameFi space for Kobe Ventures. And the Kobe Ventures is one of the full cycle fund backed by an exchange, which is one of the largest crypto ecosystem in the world. At Kobe Ventures, we are now covering 140 portfolios, covering NFT, layer 1, layer 2, gaming, social. And for the past 4 years, we got a pretty good return, about like 14x CPI and 20x for MOIC. And even in the bell market, we're still actively looking into the products and the efficiencies in this space, especially in gaming and infrastructure. Talking about the investment strategy, we think the infrastructure side is yet to mature regarding the scalability, the decentralization. We can see a lot of opportunities in the new layer 1, modularized blockchain, decentralized cloud computing. And for the application side, we're thinking for the next bull market, we're waiting for some applications that can onboard next millions of users for crypto. So yeah, that's basically about myself.
Cool. He's covered the panel for us, so we're pretty much done. All these are going to do the same thing. My name is CJ. I run the sales team over at GSR out here in Asia. A bit about myself before I go into the firm. I spent most of my life in traditional finance. I was at Morgan Stanley and Nomura up in Hong Kong for more than 10 years. You can do an age backtrack, I'm pretty old. You get used to it. GSR is actually one of the largest altcoin market makers, and that's how you name who we are. Besides this, we market make predominantly for token projects, a couple of the exchanges as well as do things like OTC and treasury management. VC's become a part of the business in the last 1.5 years. We've deployed close to 100 million, all from our own balance sheet. We don't have LPs in our fund. And our approach is pretty much what he said, where it's the next 1 billion users, so to speak. But in short, it's about finding the right people with the right intention to build. Being layer 1 agnostic, being sector agnostic, and really picking people who want to contribute to where blockchain, crypto, and really this whole journey is going to take us. Thanks.
Yeah, Toby, thanks so much for having me. And we run Blockchain Founders Fund, which is an early stage venture capital fund in the space. We have now I think 110 portfolio companies now, which is growing. Quite excited to be at this panel. We just had Splinterlands, the largest game in our portfolio listed on Huobi. Done a lot of stuff, good stuff with GSR as well, in the venture space and the market making space, and kind of been a long-term friend and supporter of the fund and the ecosystem. So we are really early stage, pre-seed seed deals for the most, equity first, and then token more or less if we own equity in the space, or more opportunistic if we really like synergies from a portfolio perspective. And we focus a bit more global, right? So done a lot of deals in 5 different continents, majority is still US and Asia, and been in the space and other fund for about 3.5 years. Myself, I'm from Germany, started private equity investment banking, did some restructuring stuff, and had a startup at some point in time, which then I left to join a US-based VC fund, and now running blockchain farms with my two partners for the last 3 years.
Nice. Okay. So, on top of my mind is a question of valuation, right? So, in November 2021, total market cap of corporate was 3 trillion. And now we're down to a sub 1 trillion level. And obviously, in the last couple of months, there have been some crazy valuations. Some startups are pre-seed, pre-product, raising 20 and 50 M, very, very good teams. My question is around how you're deploying right now. Is that different from how it was a couple of months ago? How is that different? And this maybe want to start off.
Yeah, sounds good. So I think for the last 1 or 2 years, we invest in projects mainly on the narrative side. I think the valuation, there's no right or false valuation model in the space for last probably 4 years. Like for DeFi, we probably look at the TVL, the transaction data. But in the past 1 year, we didn't see a lot of DeFi protocols really combine the revenue model with the token. So it's really hard to assess the valuation or the FDV for token projects in the space. But I think later as Kenneth mentioned that I think the top valuation, the market cap is top at 3 trillion, and now it's less than 1 trillion. So in next bull market, I think we are really looking to the projects with the business model. In the past 1 or 2 years, we've seen a lot of projects, but they're really about governance. And the risk model is quite small. Some projects have like a multi-billion valuation, but they only got a 700K or 700 million revenue every year. So that's definitely makes no sense in this space. And as I mentioned that we are trying to find the projects that onboard next millions of users. So I think later on, our valuation model is more on the user single account or the TVLs you have in the DeFi pool, and how you can use TVL to make the value grow, like Curve or later ones. So they are already quite cognizant for us. We probably even do some OTC deals for like pushing DeFi projects other than investing in the new DeFi. And for DeFi side, we're more looking forward to the innovation from the probably CDFI. So we want to see something that combines in the transaction side. So that's about our strategy.
So it sounds like is it specific to the vertical that you're looking for different metrics for particular verticals?
Yes.
Yeah, there's no one blueprint for how you assess this.
I think for so if we are talking about gaming in this space, we're compounding projects with the TradFi side. So if we are looking at some projects like SLG, MOBA, or MMORPG, we're actually looking into the users we have in the website and what is the possible measures for the website. So that's how we can look into this part. But I think web gaming is quite different from web gaming because you actually integrate some web features like token, governance, tokenomics, NFT. So for this part, we really compile the models for Web2 if we don't have the preliminary method for that. And for DeFi, since it's totally new for what we pay, right? Because you only got a TVL and the transaction data for that. So only as you have the right combination of economics, you can do the right evaluation side.
Thank you. I think it is Sandra. Join us. Sandra, you want to introduce yourself?
Sure. So my name is Sandra. So I'm the ecosystems lead at our Live Ventures. So we're the biggest Web3 accelerator in the world. We have a portfolio of over 140 companies, and we're running 6 accelerators this quarter.
Thank you. We're just having this discussion on valuation, how the folks are deploying capital at this stage of the market. CJ, we're going to talk about how this GSR is deploying.
Cool. I think Evan said it nail on the head, right? How do you value a startup blockchain now? Do you approach it from how you look at TradFi, what we've done before, where you do this kind of cash flows, models, projections, etc. I kind of feel like that's something that a lot of founders have missed out on. You sit in front of a founder and you say, what's your revenue model? And they stare at you with glassed over eyes. Revenue, wow. And the solution tends to be sell tokens, which is probably not the best one out there, or run an NFT. I guess this is something where we're going to find a hybrid model. There is going to be a way of valuing it. Users will be one aspect, penetration in the ecosystem at large, right? I think the approach of a lot of people is saying, especially GameFi, which he brought up, which is actually quite correct. He will say, they say things like there are 1.5 billion gamers in the world. Well, there they are, but how many can you actually get? And I think this is something where we're approaching with a more practical aspect. For GSR's perspective, we've slowed down significantly on the investment side. Transparently is because what we've seen is once the dust is settling now, there's a lot more builders who are being a lot more careful about really what they're trying to build. Are they building a product that will be able to adopt new users? GSR's approach to investing is slightly different from a typical VC. The reason why is, first and foremost, we are a market maker. The way we look at investments is we tend to be chain agnostic as well as sector agnostic. And the reason why is the way we view liquidity in crypto is market agnostic. To give you an example, if tomorrow Tesla stops trading, Elon Musk will build the Model Y and he will go to the moon in it. And he will continue as a business selling cars. But if tomorrow, for certain protocols, if their token stops in circulation, that protocol dies. So the way we approach it is very much almost at a layer zero concept. And to do that means being as neutral as you can, finding the sweet spot, but finding good teams who want to grow. The other part I think which people don't talk about enough is the underlying project's cap tables. What you're looking for in a cap table transparently is you're not looking to see if they've got the AAA rated investors. You're trying to see the other end of the curve. You're trying to see, are there any investors there that you want to or don't want to be associated with? And I think this is something that will take to the fore over the next 3 to 6 months of investment.
Interesting. So on the valuation, how are you deploying?
So valuations, so I come from an investment banking product background, right? So typically when we value a company at like 10 years of cash flow, and then obviously that you have a very different understanding. Now we are pre-seed, right? So most of the rounds we're doing are not price rounds; they're safe investments. And obviously then it's a bit easier because you just come up with a valuation cap and you just go for it, right? Because most of the time when we invest in some of the businesses, they're not even having an actual formal round, right? They're just getting ready and we like the team, we like what they're doing, and then we say, okay, let's do a 5 million post-money cap, whatever, 10 mil, and then let's just do it, right? And then essentially we bring in other partners in our ecosystems or other LPs to invest alongside us, and then back the company strong moving forward. That obviously sometimes changes, right? I mean, the valuation tends to go significantly higher, and now I think on average we're looking at about 400 to 600 deals a month, and I think if you compare the valuations, they came down between 4 to 8x, I would say. There's still a lot of stuff which is quite high. Like one of our portfolio companies, Magna, they just raised at 70 million, and they're still pre-revenue in that market, right? And got 15 million from Tiger Global and stuff like this. So it is still happening, right? I mean, a lot of people always tell us there's no more capital in the market. It might be true for some parts of the industry or like at least some sectors, but I think if you build a very strong team with a good prospectus of success, then capital is still in the market, right? I think it came down significantly on the token side. In the bull market, we had some companies in private markets and we're talking about the 200 mil valuation. I don't think that we see this right now at some point in time. And I don't think that it's going to change moving forward because I personally don't think we're going to get out of this bear market over the next like 12 to 18 months, probably even a bit longer. So I think for us it's a little different. We don't have like a specific multiple approach or compare a company. I mean, obviously if you look at a lot of deals, you get a fee for an evaluation that a pre-seed deal should be or realistically should be, and then obviously you take out a discount or not depending on the team and the region, right? There's significantly. If you invest in a company in the US at a Silicon Valley, you will probably have a higher valuation if you invest in a company in Vietnam, right? I mean, it's probably unfortunate, but that's just the market in itself.
Especially when you're in early stage funds, mostly looking at growth rather than profitability immediately, right? Seeds can actually find a customer base and scale this up. Sandra, maybe you want to tell us a little bit about how the interest was for in founders.
Sure. In founders, we're also very early stage, pre-seed, and it all comes down to the founders, the quality of them, because sometimes the product that we have at the start, we tend to pivot. And so if we know that the founder has a good traction, has a good record, has a good background, there's a good team there, then we know that the startup is more likely to succeed. And so what we look for in a good founder is, firstly, do they have any traction? Do they have any exits previously? Do they have any entrepreneurial background? What is their education? Because at pre-seed, a lot of it is very qualitative. We don't know, we don't have financials going forward about how the company is doing. So it all rests in kind of their traction and how we believe they would look going forward. Also, diversity of the team. If someone is a very technical founder, maybe that's complemented by someone more on the business relationship side, or if they lack in that capacity, maybe they have good advisors. Sometimes we have teams that have only one founder, and we try to ask them to look for more people in their team before coming back to us. I just think there's a lot more strength when there's a team together going forward.
Any other thoughts on founders? Maybe one kind of reflection that I have as an angel is we always talk about finding crypto native founders, right? Founders who have experience with crypto, maybe the DGen, the DeFi, so on and so forth. Does that crypto native element still play true in this market? Do you think crypto startups are becoming more like non-SaaS startups in this case? Is how crypto native founders need to be positioned?
Yeah, the old guy. Alright. I kind of feel like where we're heading towards, you will always need crypto native founders of sorts. That's where innovation and brilliance comes from. That's where young people look at things and they see things in a very different way from how we've been in the market for 10, 15 years, how we look at something. Now, as Sandra rightly pointed out, it's about the balance though. You're going to have one guy who's reaching from the stars because he's going to say, oh my god, this product is amazing. But then you ask them and say, okay, so who are your users? They look at you and then they go, but the product is amazing. You say, yes, I know that, but who are your users? And I kind of feel like this is where you need that balance. So what we've seen in a lot of founding teams, especially in the last 2-3 months, I would say, is a lot more of them, if they can't put it within the founding team, what they do is they tend to have a list of advisors who are real world, who are guys who have run businesses, who understand the concepts of, at the end of the day, a blockchain startup is exactly the same thing as a startup in Web2. Your job is to create a company which offers something where you actually have a revenue model which will entice users. The chain of events doesn't stop. So we kind of feel that level of professionalism going up a little bit, and I think that's going to be really important if we're going to get the next wave, where what we are now seeing is family officers saying, I don't mind investing in crypto startups, but this is what I need to see. And we're seeing a lot more of that nowadays.
Anything else to add on what you look for founders? Toby?
I agree very much with what Cesar is presenting here. But I think I actually disagree with the point that you need to have a crypto-native founder. Right? I mean, like, for example, invest in a company called Crayon, and you guys are also, right? They're basically building an MPC solution for custody with a single API. And none of their founders is essentially, I would say, like a DeFi DGen or whatever you want to call it, right? They're coming from a very thorough background of 25 years of banking and fintech experience, and they figured, okay, guys, there's some issue with this, blockchain technology potentially could solve, right? And then they looked at existing competitors like Fireblocks and Bitcoin and all these, and they identified like a very clear breaks of the value chain, and it's like, okay, if we do this better, there might be a chance that we can go into that market, right? And like, to be honest, we can hire someone who is a Web3 expert, right? You can hire someone who can do that, but I don't think it's like the problem what we see when there's only the sort of these crypto native founders is that they live in their own world to an extent, right? They fully believe in the technology, they're completely convinced because they're early adopters, right? But not necessarily everyone, especially if you talk about mass adoption, will think the same way. Right? And then they come up with like extreme niche solution because they see this issue with the DEX and want to solve that, which might be a market, but I don't think the market is large enough. And especially like it's really dependent that the ecosystem stays in that way to solve that niche market. But there's some larger coming up and changes the category, all of these solutions will be obsolete potentially, right? But that's a risk we as investors face. So that's why I think a good mix, or at least like a very strong domain expertise in the issue solving, either Web 2 or Web 3 is required to build a company which lasts and actually have, as you said, a revenue model and actually falls within that category of being a sustainable business even 5-10 years down the road.
Nice. So how well the founder understands how to bridge it into the real world. And then we were talking a little bit about the panel just now, and I'm intrigued about this multi-chain thesis that Paul has. How exactly do you invest in multi-chain?
So I think for all these multi-chain strategies, actually starting from 2018. So back to that time, we actually saw a lot of opportunities from the other chain because a lot of them people are layer one teams are seeing that we are extending pillars. We will solve the scalability gas cost problem. So later on, we see like layer ones are like cities, right? You have them in your own functionality. You probably have your own focus like gaming, NFT, social. So for new layer ones, I think you really need to find the setting point. Like for recently, I think Apple's in the business like quite hot in the market. But it was more like an VC hype, right? Because in the market, it's a lack of narrative for the layer ones. But a new programming language and a new solution for execution definitely sounds very crazy or charming for the VCs. But the things that you gotta innovate here for their ones. How you can make it a mass adoption, right? So they're telling you guys, you got a 150 TPS, 150,000 TPS for the new chains. But you have to have some corresponding applications to prove that there's really need for 150,000 TPS in this world. So that's why this layer ones are trying to find some execution solutions from Web 2, onboard some Web 2 e-commerce companies to the Blockhead side. It's really about the idea, the execution, and how to build your developer community at every stage, especially before the testnet or mainnet. It's really hard for us to do the validating. It's more on the community activities side and the.
So looking at a multi-faceted approach when it comes to all this. Okay. Maybe I'd like to kind of pivot a little bit to the other side of startups, which is also the customer, right? So, historically, the customer for crypto has always been sort of this anonymous guy on the internet, right? It's hard to build a profile of who the crypto customer is, by assumption. When you invest in your startups, how do the startups profile this customer? Do they targeting the same crypto customers as been so far, or are they targeting new customers? How do you think about how your startups making money from these customers? Sandra, maybe?
Sure. So we've seen a lot of new startups in the last year. The thing that I've been seeing now a lot of the time is that they're targeting people who aren't crypto native, who don't really understand blockchain, who maybe they may have Coinbase wallet, Coinbase account, but they're interested. And I think this is a big trend now. And I think a lot of the infrastructure is still not there yet, and that's why people see this as the time to come in. And if you can become one of the big players in the infrastructure layers, then you're optimized. And so we see this in industries, from fashion to investments. For example, So, for example, there's one fashion company that I've seen, and the CEO used to be one of the vice presidents at LVMH, one of the biggest fashion brands in the world. And so this team isn't crypto native at all, but they see the gap in Web3 and they would like to take that. But how they would like to take that is not to target just people who have crypto wallets or who are interested in this area. They want to kind of, camouflage it to be more appealing to just mass users. And so that's what I see going forward and building more in the future.
So from my side, I think that there's a merge between native and the Web2 space. So I think that Corleone's transaction is actually the core value generated for their ones, right? You have to capture all the transactions on the blockchain ecosystem. So later on, if we want to push the narrative to mass adoption, like gaming, NFT, social, we definitely targeting at the existing Web2 users, try to onboard them from Web2 to Web3 using some very smooth and onboarding solution. And I do saw a lot of them, companies or startups are trying to solve the onboarding user experience problem. Probably they're using a WebAuth or MPC or multi-sig wallet to help them onboard or create a wallet without using the private keys or something else. And I think for now, the missing piece for Web3 then we are actually, the user experience for Web3 is really bad. You have to find something to provide some similar experience for user in Web2. So later on, I think back to the question about founders, we need a balance between the native or Web3 native and the Web2 experience. So then you know the pinpoint for the product, and you also know how to make your product better in the open space.
CJ, to lead customers.
I think the way to look at it, when you talk about customers, you can actually divide it, right? You have the need and you have the want. Does the customer need your product or does he want your product? It's a really basic concept, right? And based on that, that's how you build. I think a lot of founders, Toby made a really good point, right? Which I missed out, which was really a lot of founders are thinking of their products in the back, right? Head in the skies. And they tend to blur that line between that need and their want. And I'll give you an example. Let's use Africa, which has millions of people. It's a market that a lot of crypto companies are looking at. Do they really need a lot of the tech that's coming out? Do they want it? I mean, from what I understand from my readings, they need basic water and basic food. Like, forget the development side of it, right? And I kind of feel like when founders take that step back and they realize that what they're building isn't going to case, and there's no right or wrong, you will be able to find a target market which has users who need it or want it. And I kind of feel like that's where you separate the basic needs from the luxury concept. So we do see more founders approaching it, I would say, in a lot more intelligent way, where they're able to segment the markets they're going after with their product. And I kind of feel like these are the type of founders that we like to talk to, because they're giving an insight. But not only that, these types of founders then understand that once you've identified needs and wants, that's when you start focusing on how do I go down that whole cycle of how do I get the adoption of these people, the strategies I employ, because it'll be very different for them.
Just quickly, I mean, so first of all, I would divide it in B2B and B2C, right? That's the first thing. Now let's look at B2B first. B2B, typically the tech is more relevant than the user experience, because they use it to solve a very, very specific problem, and they can look at Bloomberg and all these other stuff, which are just all the banking legacy systems. They're not necessarily the most beautiful thing in the world, right? But they work, right? And they have been working, and that's exactly what they're looking for. Now the B2C side, customers are very much more demanding. The churn rate is a lot higher if stuff doesn't go well, because people cannot be bothered, right? They're getting so much stimulus every single day from 1,000 different platforms. Like, if things doesn't work, like, they're not going to do it again. Or like, you have to spend a lot of effort in doing it again, right? And I think that's where the issue is right now. I don't think it's necessarily the B2B side so much, because their innovation is happening, and I think obviously there are still issues, but I think the bigger problem is the B2C side. Most of the companies are targeted towards the B2C side of targeting an everyday user, but like the basic concept isn't fully met yet, right? You target someone who's very, very interested from an early adopter perspective. Yeah, they might go back because they believe in the technology, they understand that there's some issues. But if you bring this to someone else, they're not going to do that. Like they demand something which is smooth, easy to understand, and nice. But the back-end technology isn't that important. But that's a big differentiator if you think about B2B and B2C, especially when it goes to like DeFi and all these things, because if you look at a Revolut or a Trade Republic, all this stuff, or if you look at the equivalent app within the B2B side, there are significant differences, right? And I think that's what we need to understand when we look at our customer profile, etc.
Okay. We've got 10 minutes left, so I'd like to maybe come back to market. When are we going to see the next bull market? And what's stopping us? Is it regulation? Is it users? Is it risk? Is it actual product that people use? When are we going to see this mythical Sandra?
We're in a bear market right now, but I have to emphasize is not similar to the 2018 bear market. We still have a lot of venture capital going around. Last time it really did dry up. So what I think personally is I don't think it's going to last as it did previously. And what will instigate it, I'm not sure. I think just generally the market is in a bad position. I think when more institutional players come in and we started to see more adoption for more institutional players, I think that's going to drive it even more. Regulations are coming in. More governments are trying to become more crypto friendly, but I feel they don't really understand how to do that, what to do, how to allow for mass adoption. But I feel there is more of an uptake. For example, with Dubai and the UAE, they're really welcoming their place into the crypto sphere, and I think they've allocated like a new fund of a couple of $100 million into the space. And so when is it coming? I'm not sure, but I think the time is now for the builders, for the infrastructure layers to come, and for the next step of Web3 and crypto.
From my side, I think actually from Hobby Ventures, we are quite bearish in the market. So we won't see the bull market come back in 1 or 2 years, because the market condition is recession, right? The narrative is recession. So, but I think the 2 points that a lot of VCs got money in 2021 during the bull market, raised a lot of money for the next bull market investment. So there is still money in this space, and what we have to do is to show there's really a need for blockchain technology. You have to do some on-chain transactions. You have to use some blockchain or crypto to make some product better. That's what we have to do during the bear market. In the short market, there's really a need for blockchain. So that's it.
This is a panel in itself, and it's a topic in itself, actually. The fact of the matter is this: crypto you can divide into 2 things, right? How does it trade in a price perspective, and how does the growth of startups and innovation occur? The fact of the matter is, from a price perspective, we are completely correlated with the global economy. Everybody's looking at inflation. No matter what we think about the altcoin space, it is correlated with Bitcoin almost at 1. And right now there are bigger issues at hand. I will emphasize though that I agree with what the other 2 speakers have said, right? Where right now it's the time to build, right? It's the time to put your head down. It's the time to come up with a proper business model, a proper product to pull us out of this. I actually think that regulation will be the next thing that we're going to look towards. Once the inflation stuff is done, and once we're focusing on the dots and we're done there, it's going to be a step back, and really you're going to start looking at who is going to take to the forefront of regulation. Things like DeFi, for instance, it doesn't work not because the concept doesn't work. The concept works. It doesn't work because the participants don't work. Because you have users who are out there with human nature, which is my gain, your loss. And for that to evolve, you do need that element of big brother watching over you is a very strong statement, but rather the rules of engagement in games must be the same for all. And I kind of feel like that's where we're going to grow up. A lot of people talk about institutional adoption. Let's be realistic in how that works. It's very easy to say. It would be wonderful if the insurance companies did 0.1% of their treasury into Bitcoin. But will we see that anytime soon? Probably not, because of volatility and where it stands. But it doesn't mean like, and this is why I agree with Evan, it's about the use case, right? It's about what is that use case for blockchain tech. And I kind of feel like this is what we're going to see. Rather than looking at market cap, it will be the underlying startups and their users. And that will push the whole thing.
Okay, I want to ask you a follow-up question on regulation, because you might be able to, base to tell us some insights given you were Morgan Stanley. How does that look like? I mean, it's such a vast subject with the US and MICA and all that, but how do you see that evolving? Is the White House is not providing the whole government approach, digital assets, and obviously, regulators are sensitive of size regulation. Just kind of on a high level, how do you see the regulation and risk really fitting out?
I mean, we are seeing it, right? We are seeing it where the regulators are not going after the innovators. Regulators are going after the tokens themselves, speculative aspects of it, right? Can we classify it as security, for instance? I kind of feel like this is, in a way, an approach that should be adopted. But you also have to understand that to a lot of projects and ecosystems, the token is a part of the project. And that's something which I think that regulators have to get their heads around, which is not what we haven't seen that yet, to be fair. But I do feel that what we should see in terms of regulation is a lot more conceptually sandbox situations, where regulators create regions within their different regions, like MENA, Asia, Europe, and these sandboxes have rules that people can play, can incubate with the right practice. I mean, the concept of a utility token, it does make sense. But have people found an ecosystem large enough to deploy one in? Probably not. And that's where you're getting all of these retailers, people complaining about where we're going. So I do think that for regulators to really push forward is to take a step back. If they're going to keep arguing over security token versus utility token, we're going to get nowhere. And the reason why this is a very small part of it. What they should look at is the picture as a whole, right? Where do tokens sit within an ecosystem of a startup within blockchain? And I kind of feel like that's where we should see some evolution. But like I said, I think it's going to take a bit of time with the global economy.
Awesome. Totally give it an answer earlier. Thoughts on the market and what's going to get us to the next bull market, challenges to the next bull market. Do you agree with all the previous analysts here and anything extra to that?
Yeah, I think I want to quickly touch on your point in terms of inflation as well. I think what has been proven wrong until now is that Bitcoin is an inflation hedge, right? Because essentially it's fully, more or less fully correlated. But that was because it was a very loose monetary policy, right? But now, as we see this tightening up, and obviously the interest being very, I'm pretty sure that you could reach something like a 5 to 8% in the next couple of 8 to 12 months in a sense. When that's going to happen, and if people then see Bitcoin itself as a hedge against that policy and against that environment, then I do think it can become a very, very bullish market in the sense that if Bitcoin goes up, all the altcoins will go up. I don't think they go up by themselves. Like they need to be driven up by Bitcoin, at least as of now, because it is such a dominant part of the crypto ecosystem, right? And we've seen this in this bear market as well. As Bitcoin go down, like everything goes down, right? And the same thing is happening on a constant basis. So I think that's a really, really interesting part where we actually see if this whole theory works. If that doesn't work, even in the tight policy system, then I think we have other challenges besides that as well. In terms of like what we need, I think we need a lot more developers in the space, like a lot more. We invested just in a really cool company called Meta School, actually based here in Singapore. She onboarded about 100,000 developers and is bringing them into the space and teaching them Solidity and other blockchain languages and tools, which is great for portfolio, but at the same time, I think there's only 0.1% of developers in the world who can actually do something in the space on a groundbreaking layer. Now, the second thing for me is liquidity, right? In the recent bear market, all these sushi and all the pancake stuff, they brought a lot of liquidity into the space, which made progress on the projects. So now what's the next point of liquidity into the space? Is it really the institutionals, right? We will see, is it the banks, is it the projects, is it the startups, is it the funds, or is it more the retail people that are coming to the space in certain other ways? So I think there's a big thing, of course, regulatory aspect. All these things are important, but I think it's just more like making it more usable, more use case driven, and also the role for VCs in that space is actually founding a good project and just solving something in the space. Right? I think everybody has a role to take. Is it the founder? Is it the regulatory aspect? Is it the retail? And is it the investors in that sense? Right? And I think once they all find a common ground, then I think stuff's going to look better. But I do believe it's about 12 to 18 months away.
I think we're out of time, so without further ado, please start making that.